Hello, everybody. This is Sanjay Hegdi, your host from REI Secretsville, Fast Track to Riches. Today, I have with me Alexis um, Jimenez. Did I say that right, Alex? Okay, awesome. So, I met Alex in Georgia about a month ago or so, and it was fantastic just meeting this guy. He is a visionary real estate investor whose journey began in 2012 with a bold investment that generated a 120% return. That's something that I would love to hear about, and I want all of the audiences to hear about. And since then, his portfolio has grown to over 409 units, valued at about $50 million in assets. The beautiful thing about Alex is that he is into renovations, quick sales, multifamily apartments, co-living, which we'll talk more about because that was something that I'd never heard about before. Something that, Alexis has probably was the first one to talk to me about. He talked to me about the club and everything that he's been doing. So, welcome, Alexis. I appreciate you coming in on our podcast. And, you know, uh, I'm pretty sure you will be sharing a lot of knowledge to our listeners.
Man, thank you for having me. And it's been a pleasure. I remember when I met you that day in Atlanta. Actually, it was a multifamily small boot camp. But those are the ones that I really like, because when these are small or have, just a handful of people, it's better. We connect very well, and that's exactly what happened. We connected very well. I personally connected with you, with the girls, that they were there, like Wendy, Jeanette, the other ones. I mean, we had a lot of fun, and I really appreciate you, your time, your knowledge, and everything that I learned from you that weekend.
No, that's always a pleasure, right? It's always good to meet like-minded people, and I think that's how we all grow. I learn something, I share it with you. You learn something, you share it with me. So I think that's the part that I always enjoy the most. So, Alexis, tell us a little bit about yourself. How did you get into this business? And definitely, I would like to know about that 120% return, man. That's something
Yeah.
amazing.
So man, everything started, doing the wrong path. So, before real estate, I started my first business venture was an IT company, which I still own, and that was 20 years ago. We started this company in 2006, almost 20 years. And so what happened is that 4 years later, I mean, the first year we made $60,000. Next year we made 180. The next one 690, and then the fourth one we hit 1 million. So I was like super excited, celebrating with my wife, and we were like, "Oh my God, we made it, $1 million." Until our CPA sat down with us, and she said, "Well, the amount of money that you need to pay to the IRS is this amount." And I was like, Wait a second." Because the company's net profit is this one. So basically, what you're telling me is that I need to write a check to the IRS bigger than the company's net income? That doesn't make sense. It would be better for me to go to McDonald's and get a salary, and at the end, I don't have to. I'm not gonna be in negative cash flow, right? So she said, "Well, that's the reality," and but I didn't get it. And trying to find a solution, reading books here and there. I remember reading a book that Donald Trump and Robert Kiyosaki wrote together, and in that book they mentioned a couple of times how rich get richer and they don't pay taxes. And there's many tools out there, but one of the most important one, I would say, or the key one, is real estate. So I was like, oh, wait a second, I can do that. So, watching Home and Garden TV with my family, I was like, that's fun. We can maybe buy distressed houses, rehab them, and then sell them and get a tax write off, right? So that's what I thought. So we started doing that. It was fun. We make a decent amount of money. But next year, our CPA sat down with us and she said, "So what happened here, guys? You guys are making more capital gains, making more money. So now you have to pay more taxes. And I was like, no, 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 no. I'm in real estate, you know. And Robert Kiyosaki and Donald Trump says that if we are in real estate, we can get a tax write-off. And she was like, no, 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 no. You are making more money. That's capital gain. So I was like, oh my God. So I didn't know what I was doing, you know. I was having fun. I was making money, but I didn't know what I was doing. So I continue doing fix and flip. 2017, I'm originally from Puerto Rico, so 2017, the Hurricane Maria wiped out the island, and I lost everything in 24 hours. Well, and what I mean by I lost everything, my tech company, my business, you know, employees, everything. And I used to live in Puerto Rico at the time, but I was doing the real estate business in the U.S. in pretty much between Tampa, Florida, and Toledo, Ohio. And the first thought that I had in mind was like, okay, wait a second. I lost everything and I was buying houses, fixing them, and then selling them. But if I would keep them in my portfolio, I would make be making be cash flow or passive income at this, you know, in the worst time of my life. And that was like an aha moment for me. You know, we collected 5 months later, we collected the insurance, and you know, we got a chunk of money, and we decided to invest in buy and hold. We decided not to have all the eggs in one basket. And we decided to invest in buy and hold. So we started, you know, simple, single family homes, duplexes, fourplexes, and so on. But it wasn't until 2022 I didn't know anything about the multifamily world. You know, of course, you know, driving around, you know, you see these big buildings, but I thought that only the big players, you know, hedge funds, are the one buying this type of assets. Until I went to an event in Dallas, multifamily event, and then I see normal people like you and me buying these the assets and you know raising money doing syndication. At the time I didn't know what a syndication is, and I was like, wait a second, so this is the game. And at the same time I remember the speakers using words like forecast, you know, P&L, balance sheet, employees, which is not typical in the single family world, right? So I was like, wait a second. And then the valuation, it's based on the NOI. I mean, the net income. You know, I was like in business. In my mind, I had business words. Net income in multifamily is net operating income, right? It's kind of like the same thing, but you know what I mean. But anyway, I was
Mhm.
like, wait a second. So that means that multifamily is a combination of real estate because we're buying a property, but at the same time, it's a business because we are treating this as a business. So essentially, I'm buying a business where my product is an apartment that is providing a house for maybe a family that needs a place to live in. So this is the best thing of the two worlds. So basically, I'm passionate about real estate. I'm passionate about businesses as well. So if I do multifamily, it's a combination of both, and that's where I decided to join a group to syndicate a deal, and I did a couple of syndications. I did buy small deals as well by myself or JV agreement as well, and basically that's kind of like the long story, but the short version.
Okay, awesome. So, no, that thank you for that brief introduction about how you got started. But let me ask you this: you were into software, right? Nothing to do with real estate. Then one day you just wake up and you decide, I want to fix and flip. So how did you get that courage of doing that? How did you think about like, where am I going to get these contractors? Where I'm going to find these people, and how I'm going to make all this happen? It's like going from software to something into more of the construction side of things.
You know that I never been afraid of um take action. I will say I think that I have gone through difficult time. I mean, everybody's gone through difficult times in life, but I think that the way that my parents raised me, the neighborhood that I'm coming from, a lot of things that I went through, makes me maybe stronger. I will say that I'm not afraid to take radical decisions, especially when something feels uncomfortable. And at the time, I was uncomfortable writing a check bigger than the company's net income. For there's no sense for me to be working like, business owners work harder, and I was like working, especially in the very beginning, working like 15, sometimes 16 hours a day, Saturday, Sunday. My kids were like little, my daughter, maybe she was maybe 3 years old, 4 years old. My son was 1 year old. And I was like, man, I'm grinding, and now I have to write a check to the IRS, and that situation excites me or motivated me to find a solution and maybe pivot to find a solution on my tax situation.
Oh, lovely. So, well, pretty much, you learned the hard way that, okay, hey, just flipping this out and selling is not going to save you on taxes. You got to pay a lot of capital gains that comes on it. Of course, you got into the multifamily side of things. And how was your experience with on the multifamily side of things? What challenges did you see?
So in the very beginning, I think that the biggest challenge I entered or got into a group as a capital raiser. I think that is one of the easiest way to enter, at least in my opinion, because everybody needs money. And I got involved into the group as a capital raiser. And even that I have, connections or people that maybe had the money at the time to invest in the deal, I think that I didn't have the reputation. It was my first deal. So I think that that was my biggest challenge, that I needed to make my way up in order to people trust me and then started to invest in me. I remember when we did the first one though, then the second one was easier. And I understood, that the third one was easier, even easier. So what I understood is that, this is I mean, people have money out there. There's plenty of money out there, and people, we are living. This is 2025. We're living around AI, YouTube, and so many sources or information out there that people knows that their money in the bank account is not doing anything. So they are looking to invest in other type of investment, right? So when we approach them, they are excited. They want to invest, but they want to see who is the operator behind the asset in this case. And I think that was my biggest challenge in the very beginning.
Okay. Yeah, I know it is difficult, especially if you're walking in as a someone who is responsible to raise the capital side of things, like, or going in as that is your main focus. Um, n- Not knowing who your operator is or their skill sets and the experience, it's very, very difficult because people are investing uh, in that particular project not because of anybody else. It's because they know you. So it's
Hmm.
you who is they're banking on, right? And you're
Correct.
going and at least in the initial stages that okay, I think this guy is good at what he's doing, his numbers make sense, and so on. But there is an amount of risk that you are taking going in. So yeah, I get where you're coming from. I've been there, done that.
Yeah.
So you while we were there, in Atlanta, Alexis, you mentioned about a club which was not fund of funds kind of a thing. You want to talk a little bit about that?
Absolutely. So there's a story behind it. Very interesting story that I learned a lot. So after completing my second syndication, I remember I was invited to go to an event. It was a very exclusive event. It wasn't an open event in Puerto Rico, actually. And because I'm from Puerto Rico, I was like, oh my God, yeah, I'm excited. I'm going to this event. So they called it the Hotel Summit. So basically, these are multifamily people in the US. I mean, single family as well, but pretty much most of the people that were going to this event were coming from the multifamily space, or at least any sort of commercial asset. And big names were in this event, like Jerry Norton, Vina Jerry, Pace Warby, and they did this event, and I went to the event, and I was very excited. It was a small event, but basically the whole idea was that Puerto Rico provides the tax incentives. The name is the Act 60. So basically, what it does in summarizing, because it requires a lot of explanation, but summarizing the incentives is basically you're buying assets in Puerto Rico and you don't pay taxes, and capital gain taxes and other stuff, income taxes and so on. So a lot of people from the U.S. are buying in Puerto Rico because, well, first of all, it's still a U.S. territory. Puerto Rico use dollars as well as a currency, and it's an island. It's sexy, and at the same time, the hospitality industry is booming. So people are buying hotels and then getting these incentives. So anyway, I went to the event and I met this guy. At the time, I was doing syndication, and basically syndication is kind of like an equity fund, right? I mean,
Hmm.
it's attached to the asset, but it's kind of like
Sure.
an equity fund, right? So in my mind, I was like, I would like someday to set up an equity fund, but an open equity fund that I can raise the capital upfront and then deploy
Hmm.
that capital into different assets, right? So that's what I
Sure.
had in mind, just coming from the syndication experience. So I met this guy. So this guy basically owned more than 60 or 70% of entire old San Juan,
Oh, wow.
which, to give you an idea, or the people that haven't been in Puerto Rico before, the average house in the old San Juan could worth between half a million to $1 million. And there's, different ranges, but, on average. And basically the guy owns more than 60, 70% of the entire old San Juan. Pretty cool guy. I met him. We sat down, we talked a lot. And I asked him, how did you do that? Because he said, well, basically my story is I used to work for the Hotel Marriott, and my job was to solve uh, management problems around hotel Marriotts around the world. So 10 years before, I there's an issue happening in the Hotel Marriott in Puerto Rico. I was sent out to solve the situation. When I came here, I was like, I became excited about this island. This is a beautiful island. And I was like, oh my God, I'm going to retire. I'm going to set up a debt fund. I'm going to raise capital from the US, and I'm going to start investing here in Puerto Rico. And I was like, what's a debt fund? And he said, well, have you heard about an equity fund? Yeah, I have done syndication and explained them and so on. And he says, well, basically, a debt fund is very similar. Basically, you're raising the capital upfront, and then you can deploy that capital on different assets. But the difference is that in this case, it's not performance based because it's debt. Basically, they are lending you in big amounts, and now you have to pay them back in interest. And I was like, wow, that sounds simple. That sounds easy. I like that idea. And I kept that in mind. And I wanted to do that. I sat down with an SEC attorney, and we did a couple of meetings here and there. And I wanted to set it up, but I wanted to set it up in a way that I can only raise, not raise only capital from the US, but also from Latin America. At the time, people were asking me from Mexico, Colombia, Peru, other countries in Latin America, asking me, hey, I have money. I can, can I deploy this capital in the US? I feel safe investing in the US. And I didn't know at the time what a regulation is, but what I wanted to do is to set it up in a way that I can raise capital not only from the US but also from Latin America. Anyway, it was a little difficult for me to do it. I mean, it was possible, but it requires a lot of effort, paperwork, and so on. And at the same time, I wanted to give the opportunity to the small player that has only maybe 10, $20,000, which is, if you notice the average syndication, the minimum amount is 50,000, right? I mean, I
Yeah.
have seen less than that, but it's very rare. On average,
Sure.
it's $50,000. So anyway, I'm connecting all these dots. Puerto Rico, minimum amount is 50,000 on syndication. It's equity. What if I do debt? And I was like, running all through these ideas for the last 2 years until I met this girl on a mastermind that I'm in, and she set up what we call, or the company actually is the company's name, Fractional. And what fractional does, or what she find out, is that there's ways around these laws, and she did it, correctly with SEC attorneys and all those things. But basically, she named it, or basically, instead of naming it as a fund, we named it as a club. So now investors can invest $10,000 minimum. Now they are owners, and actually you can set it up in two ways. It could be debt, it could be equity, or it could be both. Actually, the last one that we did, we set it up as a hybrid, debt and equity. um, and now you are giving the small guy an opportunity to invest with you, to increase his real estate resume at the same time, right? Get some returns and get some passive income. And that's how I made it.
Oh, lovely. So you want to expand to the listeners about in the club um, debt and equity portion as to how you do that and how is it structured?
Yeah, so the way that we did it is that the interest rate changed basically the whole atmosphere, right? 2022, 3, 4, and I will say this year sort of. Um, so in 2024, I was still doing multifamily, but I mean, you're in the multifamily world. You know that we used to underwrite deals and get deals immediately. I mean, number wise. But after the interest rate changed, it's difficult to find a deal that pencils out, right? I mean, there's
Yeah.
deals out there, but it wasn't like it was before. And the cash on cash was decreasing compared as it was before, IRR as well. So I was like, oh my God, I mean, I love this business. I want to continue doing multifamily. And I know, it's a cycle. Everybody talk about the 10-year cycle. I really believe in that. And multifamily is a long-term gain, so let's still create wealth over time. However, what can I do, or what kind of assets I can buy that I can increase my cash on cash while I'm looking for this multifamily asset that maybe it's going to take me a year to find it, to underwrite it, buy it, and so on. And in the meantime, what if I get smaller assets with a different business model that provides high cash on cash, higher IRR, and so on? So co-living. So co-living basically, it's we're taking over a single family home. I mean, it doesn't have to be a single family home. It could be like a small assets like a duplex, triplex, and so
Mhm.
on, but pretty much a single family home. And now you are renting each room by the room, but not only the rooms that comes with the house, but also the dining room, the living room, family room, basement. I mean, all the spaces. Now you turn them into rooms, and now you are buying a house that maybe, I don't know, depend on the city, you pay for it maybe 300, $400,000. You have a 2,500 mortgage on average, but now you are grossing eight, nine, $10,000 because you are renting between 8 to 1,200 per month every room, or each room. And that's exactly what I started to do. I started to do it by myself. I didn't want to raise capital in the very beginning. I was exploring this idea, and it went very successful. So now that I had proof of concept, I decided to do my club, and I started to raise capital. And it's funny, man. I really enjoyed it because I had people that only had $10,000. I have people with more money. I have investors that
Mhm.
deploy $50,000. But I feel so excited, so proud of the people that they invested 10 grand, 20 grand, because they didn't have the $50,000. And I have people actually, they call me and says, oh my God, you don't have an idea how many times I had tried to invest in a syndication, but the minimum amount is 50,000. I don't have that money. And now you're coming up with this idea that the minimum amount of investment is 10 grand. I'm all in. And, people were excited. So what I did, the last deal that I bought is a duplex. So imagine it's a two-story house, but the two units are upstairs. So downstairs is a full empty basement. So when we underwrote the deal, we underwrote the deal with 8 rooms with shared bathroom and 4 rooms with private bathroom, which is typically you are renting the rooms with shared bathroom at $800 and the ones with private bathroom at $1,200 on average, right? So we underwrote the deal that way, and we were grossing on paper maybe $11,000, $12,000. Okay, cool. So we bought the asset, and immediately, based on the floor plan, we knew that we can do 12-room setup. We close escrow, we raise the capital, we close escrow, and then a couple of days later, the contractor went to the property for the first time because he did the scope of work based on the floor plan and all the documents that we had. So when he went to the property, he says, wow, Alexis, the way that all the pipes are run out and the house structure and everything, we can easy set up a 12 rooms with 12 private bathroom, so we can increase the gross profit. And that's exactly what we did. I mean, we are in the process right now because we closed almost a month ago. But now, instead of grossing 11, now we're grossing $14,000 on paper. And of course, the mortgage is still the same. The mortgage won't change, right? So we bought it for 290, and that's another thing. We bought it for 290, and when the appraisal came in, the projected appraisal came in for 555. So all the investors, were excited. I mean, we are excited, and that's how we are doing deals right now. I mean, while we are still entertaining multifamily, but multifamily takes time, right? So we are working on this one and then keeping ourselves busy doing these co-living assets.
So when you were doing this co-living assets and you were modifying all these changes, did you have any regulations that you had to follow that would not go against the housing authorities and things like that?
Yeah, correct. So basically the key is to have, of course, a door to get into the room, a closet, and a window. So if a fire or something happened, the person can escape through the window.
Got it. So you made sure that all these things were taken care of.
Yes.
Awesome. Yeah, no, that was very witty thinking and very innovative of you to come up with something like that. So is this something very similar, you would say, to student housing? It's more for the adults, or how would you classify that?
It's kind of similar to the student housing. Yeah. The difference is that you aren't dealing with students or parents. At the end, you're signing the contract with the parents, right? Um, you're dealing with, you know, people that middle class people, I will say, single. They don't have kids, they don't have spouse. They need a place to live or only to sleep. If you think about it, and if you put yourself on their shoes, and the typical apartment, maybe in the area, is renting for $2,000, and now I am offered only a room, a room with the bed, small desk, and the rest of the amenities, kitchen, bathroom, the necessary things that we need to live in, and it's only $100. Why not, right? So if I'm a single person and working maybe two shift, that's what I need. I don't need like a big apartment and spend $2,000 every month, right? And that's our typical tenant. So when we are looking for these type of assets, to give you an idea, we're looking for assets where the nearest bus stop it's at least, or the maximum, I would say, no more than 10 minutes walking distance. That's one, and the property is nearby factories, maybe shopping centers, maybe a couple of fast foods here and there. That the average people can live in one of our properties.
Lovely, lovely. So you made it. You took a house, you made that into a motel. Like a Staywood Bridge kind of a thing, which has got a small space for living. You have the kitchen and you have the bathroom and a desk. That's pretty much what you converted that into.
Yeah, and sometimes small TV as well. I include, a small TV, 32 inches is only $99 in Best
Yeah,
Buy. So, yeah, so basically I'm giving them, the amenities and that a regular person needs to live. Yeah, but basically it's the way that I call it. I mean, the real name is co-living, right? But the way that I call it is micro-multifamily because it's kind of like a multifamily, but in a small way, right?
small. Yeah, absolutely, absolutely. So, how big is the kitchen and the bathroom when you do all these things?
So you don't want the key. I mean, the bathroom is the typical size, but the
Yeah. Okay.
kitchen you don't want a big kitchen. I mean,
Okay.
just the normal size. Why? Because you want to avoid common areas in the house.
Got it.
So the bigger the house is, sometimes I have like two fridges, and in the laundry, actually in the laundry room, I have like two dryers, two washers. But yeah, I mean, pretty much you have what they need. You don't want common areas.
Okay. Oh, so you give the in that same room, they also get a dryer and washer?
Well, in the laundry room, but in the same property.
Oh,
Yeah,
in the laundry room. Okay, got it, got
yeah.
it. So you have a laundry room and the and every person has an individual kitchen and bathroom.
No, it's only one kitchen for the whole house,
Okay, got it.
but and depend on the asset. Because I have, for example, I have one property that has 10 rooms. That one has only one room with one private bathroom. The
Got
other
it.
9 rooms have three share bathrooms that they can, split
Got it.
between the nine of it. The one that we closed the 2 weeks ago. I mean, we're still working on the rehab process, right? But that one is going to have 12 rooms with 12 bathrooms, so everybody's going to have their own room.
Got it. Got it. Okay. So everybody gets their individual space, their lock and key that they can keep it in, and have a at half the price a place to live in.
Um, I haven't done that, but I hear people doing well, actually in the kitchen. I have seen other operators, for example, using how you call it, it isn't lockbox, but like any lock. I mean, it's a lockbox because it has the keypad, and
Okay.
now you're giving the tenant privacy, so they can put their stuff with the lock.
Yeah.
Yeah.
Got it. Got it. No, that was very innovative of you. How did that idea come to you?
Well, it's trendy right now. It's
Okay.
trendy, and so it was me just looking for assets that I can increase the cash on cash when the
Uh-huh.
interest rate started to increase, and I wasn't finding the deals that I was looking for or finding the cash on cash and the IRR that we used to have before. So I was like, okay, so let me try to find another asset. And the first time that someone told me about it, I was like, wow. Well, the person that talked to me about this business model, he had, as far as I remember, 7 or 8 properties. What I will never forget, he says, I'm grossing, man, $95,000 per month. And I was like, dude, with only 7 properties? And he says, yes, man, the cash on cash in these assets are high, very high. And I became so curious about it and, started to learn the business, started in it, underwriting deals. It took me, I would say, 9 months to makes me feel comfortable to jumping into the first one. And again, without raising capital, this is me by myself. I didn't want to explore in a new asset class with other people's money, right? And
Correct.
then when I actually I bought it from another operator, he was mismanaging the property, 10 unit. I bought it only with 5 tenants in it, and immediately I stabilized the property because I was using my multifamily experience, right? So immediately
Right.
I stabilized the property. In 2 months, we hit 90% occupancy rate. And, it was an amazing, I still own that property. It's an amazing asset. And that's where, I got the confidence to, okay, I'm going to raise capital. So basically, I'm going to apply the same concepts that I learned in the multifamily space. I'm going to apply them here. Basically, I'm going to raise capital. I'm going to stabilize the asset. I'm going to, hit the numbers that I need. And basically the same thing, but in a single family space.
Lovely, lovely. Yeah, Alex, I know you've shared a lot of information with us, and I know I want to be mindful of your time. But there is something that I always loved about you is the kind of person that you are, the personality of you itself. You're very giving, you're very, approachable, and so on. So tell me a little bit about yourself as to what was your background. Tell me what do you do and when you have leisure time, because I don't know whether you do get any leisure time because you're always networking and you're always out there. But some a little bit about you.
Yeah, so I'm an entrepreneur by trade. As I mentioned before, I started my tech company was the first one. Then a couple of years later, I started another tech company with two partners. Then I started a credit union. This is all in Puerto Rico. I started a credit union. I was the president of the board. Then I got involved into real estate, and nowadays I'm still owning the tech company. I am partnering up with other partners. For example, we launched a title company recently, to AI company as well, and we are about to with a huge group that I'm in. We're about to buy $5,000 5,000 car watches across the nation. This is a long-term project. It's a 10 years project. But yeah, so going back to your question, I always looking for opportunities, especially when the opportunity provides cash flow. I really like cash flow. I'm the type of person that, well, first of all, I'm not in a financial position that needs money now. And if I get it, I don't like to see 30, 40, $50,000 in my bank account getting rusty, right? So that's why I'm looking for opportunities to invest all the time and keep my money, cycling, but getting cash flow. I'm looking for assets that can provide cash flow, and that's why I'm exploring other business ventures as well. I think that the combination of that and the combination of not having all the eggs in one basket, again, going through the experience that losing it all in 2017 make me think that way, that I don't want to have all the eggs in one basket. And yes, I have different asset class in real estate, like single family homes. I have a midterm rental, multifamily, co-living, but as well I want to invest in other verticals like businesses, car washes and so on. So that's who I am.
Oh, lovely. Thank you, Alexis, for giving a little bit more about your. I didn't know about the credit union. I didn't know a whole lot of things about this, so that's great. So yeah, you are a multifaceted man, and if someone wants to reach you, Alexis, how can they reach you so we can get you more to your club?
Yeah, the first that well, if it is for the club, I have a website that is investingformywealth.com, investingformywealth.com, and then you can sign up and get in the list. Right now, we don't have an asset. We are entertaining two though, but we don't have an asset under contract yet. But you can get in the list ahead. And then if someone wants to reach me out directly, the best way is to either Facebook or Instagram, which is the way that it's written here. I mean, it's YouTube. That's my YouTube channel, right? But the same way that is at Alexis Jimenez PR, that's the way that you can find me on Instagram and Facebook as well, Alexis Jimenez PR. DM me, and I will be more than happy to help you with whatever you need.
Thank you, Alexis. And so those who are listening to this, I will tell you that Alexis is very giving. He's very open. He's very honest. If you need help, you can always ask him. He'll definitely try to help you out in every way possible. because that's the kind of a person that he is. So thank you all for listening to REI Secretsville, Fast Track to Riches. And thank you, Alex, for coming on the podcast.
Absolutely. You're more than welcome, man.